Well, a couple years ago, I received my first paycheck, and I was incredibly excited. I said, oh my God, I have this money for me. What am I going to do with it? The main part of me said, dude, be real. You're going to go shopping, and you're going to get clothes, and you're going to get shoes, and you're going to be so happy. And then I realized that, well, that was going to give me immediate happiness and a very nice outfit for the weekend. I wouldn't be securing any of my future. I would be securing my weekend outfit. So I thought, well, why not invest it into more secure long-term money, right? But then I realized I know nothing about finance. So I needed someone to tell me where to go, how to invest, and how to make the best out of the money I got. So I'm very happy, and so is my team, Francisco, Santiago, Andrea, and myself, Alejandra, to present a solution for a company that cares about people understanding where finance is going and how they can make the best of their money in those assets. In order to present that solution, we will be talking about an analysis we made of the industry, the company situation, and then we'll be following to the challenge. Next up, our solution for the challenge, and last but not least, the results we are expecting from our solution.
Okay, so first we set up these 5 key success factors of the industry in order to analyze what does a company has to have in order to succeed, in order to live in an industry. Well, what a company has to have is that they have to have automated softwares first. They also have to be very transparent with their customers. They have to know how to profile their clients very well. They have to know how to monitor and rebalance their investments through time. And finally, they have to work by these modern investment principles in order to survive in the future. Now, continuing with the analysis, based on the key success factors I already mentioned, we developed this chart in which we compared the facts about the investors, what they care the most about the investment companies. And it is compared to how Wealthfront is performing, and it's also compared to how the competitors, such as Betterment, are performing. What we can see is that when talking about the reputation of the company, the Wealthfront, along with their competitors, are doing very well. Along with the transparency factor, they are very transparent when they are talking about the information of the customers. They're also performing very well when talking about low risk and higher return investment. But when talking about low costs, we can see here that Wealthfront is performing very well in comparison to the other competitors. And finally, when talking about the advisory, we can see that Wealthfront is not giving any advisory to the investors, which is very weird because advisory is something that the investors really want from an investment company. Now, continue with the analysis. This is the Wealthfront cycle, the investment cycle as seen from the Wealthfront view. First, we have discovered the need. The customers have a need to invest. They have money, they have assets that they need to invest. And so what Wealthfront does is that it reaches to them directly, or their other way of reaching to these consumers is that the consumers reach Wealthfront. Then, once reached, Wealthfront profiles them based on the consumer needs and based mostly on the risk acceptance they want. Now, after profiling, they offer a low cost and high return to their consumers. Then they become investors of this company. And finally, they analyze the investments of all of these customers over time. analyzed all of this that I mentioned, the great challenge that Wealthfront has is how are they going to reaccelerate growth and how they're going to ensure a very successful future for them, for the consumers, and well, my partner is going to be explaining what we made up first.
Thank you. Well, to accomplish and to get the challenge, we have created this strategy based on two basics. The first one is integrating humans and robot services. As you know, Wealthfront already has robot services, but what about human advisory? What about the human touch? Well, in our strategy, we are including human touch, and we will explain you in some moments how it works. The second part of the strategy is a specialized portfolio management for different companies. We are already working with companies such as Facebook, Twitter, strong companies with a lot of investors, but you can get more companies and you can be more profitable in those areas. First, for integrating human and robots, we can see here the cycle that we already presented you. And as you can see here in blue are the parts that we are adding to the cycle and the parts that we are adding some value in that areas of the cycle. First, for candidates, second, for profiling, and third, for offering and profiling. The first one is for discovering the needs and for candidates, and also works for investors, is education. In education, we want the investors to know where to invest, how to invest, where is the revenue that they can get, where is the best way to do those things. And this is why we are creating the ABC for investment and portfolio management. Teaching them the basics of finances, the basics of investments, in the way that they can get the best knowledge of this part of the area, in this area of the business. And also we will do this through webinars, where a lot of candidates can connect in a video to see the basics that they are teaching them. For example, what are the tax rates that there are already, the interest rates, and also with videos that will be pre-recorded in order to have the videos online, and they can see their topics that are relevant in that time. For example, in that time, let's say that interest rates are very important. Well, those videos will be focused on those areas. In newsletters that will be sent via direct mail to current investors and to candidates to show them the new things and to educate them in new topics. The Insight conference, and we want to invite some candidates and some investors that already think they need more information and need to be educated, and we will teach them with a human touch, with a person teaching them how to invest, where to invest, and how to be better, more profitable. This will be for investors and candidates, as I mentioned before. And the objective is to reduce human interaction after certification. Having human interaction, but to reduce that after they certificate with this education. The thing here is that they have certificate in order to be, let's say, experts about the investment and the stock that they have. In that way, they can feel more confident and more sure about the things that they are investing. The result will be increasing loyalty because they can be in the company for more time, because they feel like they have someone that is back them, that is helping them. And also we will reduce the customer acquisition cost. As we see in your company today, you have higher acquisition costs. And the cost that this strategy will take will be, before certification, a 0.30% of fee. And after the certification, once the investor knows everything, they will be with 0.25% of fee that you are already having that fee right now. The second part is the profiling. In this part, we want to profile the customer not only about with risk acceptance. What about the human need that they have? We see that all the customer doesn't need the same amount of human touch. That's why we are profiling them according to some evaluations that we will be doing. For example, the risk that they are accepting, also the information that they need, and the different aspects that can lead us to see if they need a lot of human interaction or not a lot of human interaction. As you can see, we have target generation and the profile. In target generation is the Generation X and Millennials for the first profile that are candidates needing high human interaction and finance education. There will be the most important human touch that they will have. In that part, we want to take them from this part to candidates needing minimum education and minimum human interaction in order to reduce costs. The second profile is the millennials that are candidates needing moderate human interaction and finance education. The third one are millennials, are people close to finance industry that are candidates needing minimum human interaction and finance education. Of course, these are the ones that we think that will be certificated with the education that I already mentioned.
But who's going to educate these people? We mentioned before that it's just software is not enough. So we are going to offer them between the profiling and before they reach their low-cost, high-return investments, a human touch. A human touch that will be a specialized advisors with experience in ethics and the core values such as transparency and technology-oriented that will assess investors according to their profile through education and personal contact, close contact, one-on-one that is going to tell you, hey Alejandro, no, that asset is not for you, that investment is not good for you, what about this other? They will be selected to match the core values as I mentioned, and they will be in continuous training, especially on the reduction of rotation of your personal, and of course to reduce the cost of acquiring. They will be working in the back end and in the front end of the cycle. In the back end, they will be creating all the educational content for the potential and the actual investors of the company. And in the front end, they will be on constant contact, depending on the profile, of course, the investor landed. If they need very constant communication with them, or they just need some kind of advisory now and then. The objective of this human touch in between the cycle is to keep not become just a software company that manages your money. It's a company that cares about not only your investment but your future in the long run. And the result will be increasing trust from the investors since you are giving them a constant companion throughout the cycle, starting with the education that my colleague mentioned before. This change in the cycle will mean a new communication perspective for the people you are reaching. We have three main audiences. Let's start with the millennials that are starting to invest, aka someone like us. We use mainly social media and specialized media if we know about finance. And the message would be that a great future starts with a great companion here at Wealthfront. Next, we have an audience of people who are not happy with their investment services at the moment. And they are found in social media and specialized websites, such as the Bloomberg website. The message to communicate to them is that Wealthfront is clear, efficient, and fast as a robot, but is caring and understanding as a friend. We care about your future. We can educate you to have a great future. And last but not least, we have the people who are already investing with Wealthfront, and you can reach them via email because you have your contact list and direct marketing. And the message again is we not only care about your assets, we care for your future, so let us help you get to that great future. The objective of these communication strategies are to inform of the new services starting with education and to persuade the people that are not already in Wealthfront to join Wealthfront because of the new services. The results will be to positioning Wealthfront as a hybrid between technology that is fast, that is efficient, and the human part that is caring and understanding of your needs and your future, as well as to increase the talking about Wealthfront's new services. You were already the leader in the industry, moving first, doing all these innovative changes, but you were losing the human touch. So with this, we're trying to communicate the audiences that you got it back. You got your human touch back.
Now, the second pillar of the strategy is going to be specialized portfolio management. We know that tailored portfolio management for different companies are going to be a big success on the company. Why? Because the necessity of employees of companies such as Facebook is not the same necessities such as Twitter, because the stock options are different, their salaries are different, and that's why we want to specialize and go through an offering to regain and retain all those employees for specialized companies. We know, for example, that well-established companies like the one we mentioned not have the same necessities as startups at different stages. So this is going to be based on the company profile. We suggest you to have this portfolio management based on the company profile, in the industry, and the employee profile. Based with all this, we expect results of increase our acquisition rates between this portfolio and reduce acquisition costs going directly to this portfolio management, which we're actually doing very well. For all these strategies, we know that the main resource needed is the human advisors for all the human interaction between the investors and the company. The managerial staff, we know that we have to regain specific positions that we actually don't have in the company. The education materials for the education partner and the education program that we're going to be management, and the new algorithms depending on the profile. This is the action plan, starting with hire specializing advisors in the first 3 quarters of the first year. At the same time, we suggest you to prepare all the educational content for the part of education in the first 2 quarters. The corporate tailored plans are going to be in the 2nd and 3rd quarter of the year, and the profile algorithms in the 2nd, 3rd, and 4th quarter. These are the principal activities that we suggest you to implement in this order in order to achieve all the results that we're going to present in the next slide. First of all, the results is that we're going to gain and regain and empower the investor trust in this company. Second of all, we're going to be passionate as tech human, that we just not only care about tech and robots, but we also have that human touch in case you need it. We want to increase customer loyalty with all these strategies, and the long-term reduction of customer acquisition costs. It's going to be way more cheap to this customer acquisition rates with all this strategy. And finally, increase customer acquisition from customer employees. This is going to be a mixture about business to business and business to consumers going with this tailored plans.
As I mentioned before, we're more than happy to help a company that will help us in the future, will help understand how the finance world means to us millennials, so to everyone that is reaching out to them. So thank you very much for the opportunity, thank you very much for your time, and we're more than happy to answer any question that you may have.
Thank you very much. Very good. I'm glad that we're well positioned as Generation X rather than millennials, but just a very, very interesting presentation. I think as the Q&A goes through, it'd be interesting how you convince us to change our model. The human touch is an interesting one. One thing I've got as an upfront question: the market changes, the environment changes. Your model is an upfront education, human touch at the start to convert people to being expert, but the market changes. So how are we expecting our customers to keep up with the change? Do we bring human touch back in?
Well, most definitely the first approach is, of course, to educate them in the ABCs. And yes, an update continuous education would be the most recommendable.
So it's human touch throughout?
Not, as my colleague mentioned, they get a certification right after after we understand how this thing works, you get a certification. So later on, you get to the level where you need no more human interaction. But an update, let's say 6 months or the next year, just a quick update of how the tendencies or where the trends in the finance world are going would be a nice implementation to compound on this.
Well, so basically you are recommending us to change our business model from a very niche positioning to a hybrid model. So how can you persuade us that we will not been using our strong foothold in our original niche market. At the same time, we can gain wider coverage of our market share.
Because of the customer needs. We know that actually that the customers needs those human interactions, and all of our investors are not in the same stages. That's why we're separating in different, we're positioning in different stages. So at the beginning, you probably need that human interaction. That's why we're giving you education to let you to have just through the robots and through the technology. So this is just first stages, and this is just the profiling. And also right now, our main target is millennials and people that use a lot of technology and are technology based. With this human interaction, we can go through different generations like Gen X or the baby boomers who are not very reliant on technology. They can have a number that they can call and ask something. So that's why we want to reach out more customers, more investors, and at the end, leading all those investors throughout just technology-based strategies.
Well, at the moment, our company don't have the expertise in educating and advising people on investment, and we use the mathematical model. So in your action plan, actually, we have to put in place the expertise and the professional team in 3 quarters. So can you elaborate more on the implementation plan?
Can you repeat it?
Yeah, on how we can execute this strategy to put in place the professional team and expertise within the firm.
Yeah, throughout the specialized team for all this education, it will be an education department, which is going to be in charge of designing and implementing all this educational contents for the investors. So we could let it throughout the specialized team and put all this.
Could you just flip back to how you costed that?
Of course.
That's your timing,
That's right.
but the costing.
Oh, the costing of each specific plan. Okay, yeah. In one of them we have right now the fee. It's the 0.25%.
And how did you derive that?
In the case it was that you have a service fee of 0.25%. For all the customers that need this human interaction and this human activity, we increased for 0.30%. Those 0.05% is going to give us a cost of all these human advisors and the strategy costs. And
the 0.3% is.
sorry.
The 0.3% is going to cover.
Yeah, that's right. It's going to be covering at the beginning, and the 0.25 would they need this human interaction. And it's of course this is going to be implemented project, and we can reanalyze and see if this is working or not.
I'm just reflecting a little bit on the questions there, because it's not just the ideology change, it's the feasibility change. So maybe we'll come back to that a little bit, because I'm not convinced on the costing. But maybe just to take it a little bit on the ideological change as well. Our model changed to more human touch, and we did talk, I think we need to be clear, it isn't before and then certification is a full stop. We've talked about continuous cycle, and again that comes back to your costing, which I'm still not convinced about. So there's continual human touch elements to this. Why would our customer base want to do this with us? In terms of, come to us, we educate you, and then then you're free to use the system. Why wouldn't they just use traditional competition, who have advisories who are expert?
Because we also have the algorithms and the technology based. Because we have the robots and we have all this. Because the company started being as a 100% tech.
It's our performance record.
Yeah, that's right.
Sorry, go back to your first slide there. In terms of, was performance part of the criteria, or I know cost. We were cost before. So you were telling me that our cost is our differentiator. So your first slide, which talks about the good, bad, and ugly. Was performance one of the criteria, or?
Yeah, that's right. Low cost.
Oh, cost.
Yeah.
Cost. But low risk, high risk, return investment. We're not an outlier. We don't stand out as being better.
Yeah, but we're going to continue the same, being...
As our competition, we're benched pretty much the same. So that doesn't differentiate us. So how does the customer really care about? It was cost. You're telling me it's cost.
Yeah, that's right. So we're going to be, again, in a very low cost, in a low risk, high investment. We're going to be following the same strategies of investment. Just the difference is that we want to develop our investors and we want to educate our investors. So, and go through different generations and different necessities talking about investments. So we want to development, we want to educate them, and finally go to a stage where they don't need human interaction and they can just interact with the robots and with the technology-based proposals.
Well, actually, I have a similar question in mind. We have been doing very well in terms of the investment performance, and cost is our competitive advantage. And even though people may say that we are lacking advisory, but still, by this model, we can perform well in terms of the investment performance. So why should we change fundamentally the whole business model to try something else, but not investing to reinforce our existing competitive advantages?
Well, mainly because the customer needs are changing. They not only need somewhere to put their money, but they need an assurance or reassurance that their money is going to be more profitable in the future and that they are making the right choices. And not only have a connection via software that there's a square that's going to tell you, hey, you're going to get $100. Other than the reassurance, the natural reassurance that we get when someone else is telling us that we're going to the right path. So the differentiation here will be that reassurance you can give the customer beyond the reputation that the firm has on the assistance that they will be getting on their investments, on their future investments.
Thank you.
Thank
Thank
you
you.
very much.